Greetings, members one and all of the Salivation Nation. Bitcoin versus gold. 10 experts say which asset they'd rather hold. Let's explore. Yes, that did rhyme, and I did that on purpose. I'm a poet and didn't realize it. This is some information that has been gathered from Business Insider from 10 financial experts that give differing opinions on which asset they would rather hold between the two. As you know, both gold and Bitcoin have gone to all-time highs over the course of the past year. So there's a variety of different opinions on them. And we're going to take a look at these. There's 5 statements that are basically pro-gold compared to Bitcoin, and then 5 that are pro-Bitcoin over gold. So let's take a look at these. You may agree or disagree. I think there's a lot of different good insights and valid arguments on both sides here. So let's start with the ones that are more pro-bull, pro-Bitcoin. In this aspect here, we have Anthony Pompliano of Pomp Investments and Morgan Creek Digital Assets. He says that Bitcoin is 100 times improvement over gold as a store of value. The world is realizing this and beginning to reprice digital currency in real time. Although Bitcoin has increased hundreds of percent in the last few months, it is likely to continue appreciating in US dollar terms over the coming years. I suspect that Bitcoin's market cap will surpass gold's market cap by 2030. For this reason, I own no gold and have a material percent of my net worth investment in Bitcoin. So there you go. This guy is totally on board with the cryptocurrency Bitcoin. And seeing its performance over the past couple of years, it's understandable why. However, we have seen some great pullbacks in Bitcoin as well, and it is, by and large, a speculative asset. I think most people would agree, even though it has certainly matured quite well over the course of the last few years. The second statement is from Pavel Mativ, who is the CEO of Wirex. The crypto bull run has seized the attention of millions of people who previously had never considered digital currencies like Bitcoin to be an alternative asset. While gold and Bitcoin are both sometimes used as means to diversify and hold a range of valuable assets, in many ways they are quite different. Bitcoin and other digital currencies can be easily traded on platforms. We have seen progressive global firms offering to receive payment in Bitcoin, and advocates such as Tesla taking an active role in promoting it. This liquidity, ease of exchange, and wider use in modern economic times are more of major differentiators. Gold has a relatively defensive purpose to hold value, whereas Bitcoin and other currencies are intended to have several uses, not least of ease of exchange, purchase, and liquidity. I think that's a viable statement and argument for moving towards digital currencies, and especially something like Bitcoin, where people literally are using it as a method of exchange. And so that, I think, certainly does give some credence to and make a good argument for Bitcoin. Its liquidity, something certainly to consider. The third statement is by Daniel Ives, who is a managing director and senior equity research analyst at Wedbush Securities. He says that based on the trajectory of this digital gold path and use cases globally, we believe Bitcoin will be mainstream asset class in the future. While gold has a clear value in safety, the upside in Bitcoin is eye-popping if it stays on its current course over the next decade. And so that is certainly, I think, a valid statement to be made. He understands gold's value, but is impressed by the Bitcoin's performance. So as an investment, it may be worthy to put some money into Bitcoin, diversification in that aspect. But as I've always said, Don't ever put money into something you're not prepared to lose, especially if it's speculative. And really, Bitcoin is backed by the work that it takes to create a Bitcoin, which essentially is energy. That energy is dissipated and is gone now. And that is something to consider as well. Whereas gold, as we know, it is what it is. Its physical properties are really never ending. They will always be here in one form or another throughout the course of history. The fourth statement is by J.P. Theroux, CEO of Uphold, which is a digital money platform. And so it's no doubt that he's going to be definitely pro Bitcoin. Gold is, no pun intended, the standard if you want to measure purchasing power over millennia. The liquidity of gold has been constant and consistent over time. Gold is what defines the x-axis of purchasing power over time. Bitcoin, while it shares defensive qualities with gold, has the additional attribute of being aspirational. What Bitcoin would seem to possess is the potential to go up to multiples of a moonshot. No one thinks gold will moonshot. Bitcoin is also finite, unlike gold. Think about that statement for a moment. Bitcoin is also finite, unlike gold. It almost makes it seem to be that gold is infinite, but it is not. No increase in demand can change that. There is zero elasticity. So the thing is that gold is finite. Now, we can pull more out of the ground, but you can only pull so much out of the ground. With Bitcoin, yes, it's limited to 21 million coins, but there are forks in the road, literally, in terms of ways that like Bitcoin Cash and others. But also, Bitcoin is on this blockchain technology that may or may not be around. Who knows how these things are created? And obviously, the ledger system and the blockchain keeps track of it and limits it to these 21 million coins. But I just wonder if that can be changed or hacked. I don't know. That's just an open-ended question. The fifth one in promotion for Bitcoin over gold would be from Mike Venuto, who's a core portfolio manager of the Amplify Transformational Data Sharing ETF. And he says that I would probably pick Bitcoin, but why not both? Gold and Bitcoin have similar aspect to the portfolio. I would add gold as a diversifier. There you go. I agree with that. I would add Bitcoin as a diversifier. Yeah, there you go. I would agree with that too. The hedge is diversification. Bitcoin is a tool to get there. Bitcoin is a hedge to losing money to something stable. That makes sense, although the volatility, and as such, and the rate it's climbing, there's probably a greater chance that it could go down than up from its all-time highs, but one never knows at this point. Now we're going to move to the pro-gold statements here. We're going to start with David Rosenberg of Rosenberg Research. And he says that my vote would be for gold because it has thousands of years of a historic record as a store of value. In other words, it's got intrinsic value. It has 1/5 of the volatility of Bitcoin and doesn't face the same competition risk. The day that Queen Elizabeth trades in the 5 pounds of gold in her crown for crypto is the day I'll shift course. So that historical value over millennia is what is driving him to this conclusion that gold will not change in terms of its of what it has been for millennia. And I certainly cannot argue with that. Phil Baker, the president and CEO of Hecla Mining Company, shares the similar view. He says that gold and silver have been stores of value for mediums of exchange for at least 4 millennia in every civilization in every corner of the world. It has unmatched accessibility to people of all economic standing and technological knowledge. And gold is the ultimate currency of central banks, silver of the people. There is room for cryptocurrencies too, since their digital nature is a fundamental difference from gold and silver, but that characteristic also ensures that cryptocurrencies will never replace gold and silver and will ultimately improve the metal's value. And that's an interesting take. And the thing is that they can work hand in hand. you can use the blockchain technology or some sort of ledger, digital ledger system, such as Hashgraph as well, to kind of keep up as a system to be able to accommodate and to quantify and to keep a record of a gold, physical gold out there. The third is from Sylvia Carrasco, who is the CEO and founder of the gold exchange platform GoldX. She says that gold has long been considered to be the safe haven asset of choice. And while Bitcoin is the new kid on the block, it's debatable that it will eat into gold's market share for a number of reasons. Bitcoin and gold both have significant advantages over fiat currencies because neither can be diluted or debased. There is a possibility that Bitcoin could one day cease to exist through hostile legislation. Some Bitcoin derivatives have already been banned. Companies such as Facebook, who have attempted to start crypto, have been prevented from doing so. So while Bitcoin is a more recent form of investment that is certainly receiving a lot of hype, gold has retained its value through centuries. Whether Bitcoin will offer the same level of longevity is highly questionable. I do agree with that. You've heard me talk about that Bitcoin could be the new MySpace, although now one has to wonder if it's too big to fail. Nonetheless, another either blockchain or a form of a ledger system that takes up a lot less energy to keep track of and utilize could come aboard. And that kind of system could create a new cryptocurrency that could spread faster and grow even quicker, kind of like what Facebook did with MySpace in the social media world. And that could happen to Bitcoin. And so that is the kind of thing that we have to keep in mind and consider, as there have been many altcoins that have failed, but some are really taking off as of late. The fourth statement, the pro-gold statement, is from Michael Reynolds. He's the investment strategy officer at Glenmead. One of the assumptions underlying Bitcoin's bull case is its limited supply, but the supply of cryptocurrencies on the whole is theoretically unlimited. Some extol Bitcoin as a portfolio diversifier, but has so far exhibited higher correlations to equities than gold, particularly during periods of equity market stress when diversification tends to add the most value. The demand for Bitcoin may be over its skis relative to the likelihood to carve out a significant economic or financial use case. So that's an interesting argument indeed. And also, to build upon that is the thing that it could essentially be traded in the stock market with futures and the like, and options, just like you see with many other commodities. It's a digital asset. It may trade like an actual asset. We'll see. Can you imagine a Bitcoin ETF? The fifth statement is from the Director of Investment Strategy, Aberdeen Standard Investments, and that is Robert Minter. He says that both crypto and gold have passionate investor bases. However, there are very clear differences. Gold's history as a basic building block of global money is 5,000 years old and time-tested. Bitcoin is 10 years old and has existed in only one monetary regime. The standard deviation of Bitcoin's price is 75%, making it a horrible store of value. Recent price history shows a large bias towards speculative interest, so much so that companies are tempted to include Bitcoin on corporate balance sheets to help grow assets in excess of corporate performance. Crypto is a poor monetary substitute. In the U.S., filing your taxes requires a voluntary disclosure of your cryptocurrency profits. If a crypto trade automatically generated a statement to the IRS as a brokerage transaction does, the speculative outlook could dim. Yes, indeed. And I've heard that some exchanges like we see in Coinbase are already doing that automatically. We'll see how that plays out. But nonetheless, it is certainly interesting to see these differences between Bitcoin and gold. And so there you have it, folks. What are your thoughts? Bitcoin versus gold? Which do you prefer? Or are you of the mind of one of our statements out there is that, hey, why not have both? I'd like to extend a multitude of gratitude to you all for taking the time to watch this video, and encourage you to please rate, share, comment, and finally, after all of that, subscribe.